Welcome everyone to FutureSight's Fireside Chat, insights for future founders and entrepreneurs in residence. My name is Krista LaRiviere, partner here at FutureSight, and we are delighted to host you today, along with two very special guests, Justin Mason, a successful FutureSight EIR, now founder and CEO of Caring AI, and Stephan Thomas, a current EIR in FutureSight's Venture Studio. Just a couple of housekeeping items before we get started and before I introduce the rest of the FutureSight team here on the webinar today. We've had an incredible response to this event, so thank you for taking the time to be with us and listen in. It is a clear indication to us that the Venture Studio model is of interest to many aspiring entrepreneurs. If you could just say a quick hello in the chat and let people know where you are from, that would be fantastic. Also, ask questions in the chat throughout the webinar, and we will do our best to address them at the end. We are recording this webinar, and it will be made available to you within a few days via email. As for the format today, we have the full hour together, and we have approximately 35 minutes of content to get through. Then we will open it up for Q&A after that. So let's get started. So I'm delighted to introduce to you our team here on the webinar. So myself, Krista, I'm responsible for growth, which encompasses marketing and capital formation. We have Prathna Ramesh, partner, and Prathna works closely with the recruitment team and is instrumental in helping to select EIRs to come into the studio, as well as ensuring our portfolio companies are investment ready for downstream rounds. Next, we have Anu Joshi, our Director of Talent, driving our talent acquisition team, who's constantly seeking proven repeat founders to join FutureSight as EIRs. And then next we have Alan Smith, partner, and Alan works alongside every EIR through the venture validation and formation stages. And then last, but definitely not least, we have Cindy Gamble, one of our talented venture analysts who does so much more than that. And so if we can just go to the next slide, Prathna. And the next one. So this is the agenda for the event. Actually, if we can back up, the agenda for the event, Prathna is going to walk us through the Venture Studio experience and the FutureSight company building model. And then both Justin and Stephan are going to take some time to talk through their experience within the Venture Studio and where they're at now. And then Anu's going to talk to us about what we look for in an entrepreneur in residence, and then we'll move into the Q&A where the team will participate. We'll watch for questions within the chat. So yeah, next slide, Prathna. So just a little bit about FutureSight to make sure we're all on the same page in terms of what exactly we do. So we know launching a startup is not an easy task for one or two people, and it's not easy even if you've done it before. So FutureSight is in the business of building and launching companies from 0 to 1 every day, helping to navigate markets, validate ideas, connect with prospective clients, and formulate the best MVPs, all to de-risk your venture and ensure it has the best likelihood of success. So that's what a venture studio does. There's an official definition. So a venture studio is an institutional co-founder that proactively invests in and builds ventures by using the expertise of a central services organization and playbooks for repeatable venture building. So that's the official definition. We can jump to the next slide. And so really, how are we different? How is a venture studio different than, say, an incubator or an accelerator, right? And in a nutshell, we invest in the most significant amount of capital into the human capital at the earliest possible stage in the venture building process. And we build alongside the co-founding team from day zero. And so that's really really how we are differentiated from incubators and accelerators. And so next slide. And so our niche and where we focus. So we co-found and fund vertical B2B AI native companies with values-driven leaders. Okay. And yeah, next slide. And then a handful of our portfolio companies, Caring AI, Addy, Mercata, Fruscope, Medivox, the founding team came into the studio, worked alongside our venture building team, and have spun out and are now out there and growing. And I believe without any further ado, I'm going to hand it over to Prathna, who's going to walk us through the studio experience. Over to you, Prathna.
Thanks, Krista. Hey guys, nice to meet you, and so glad to see so many of you join in here at 11:30. My name is Pratna, and I'm excited for the next little while. I'm going to keep my eye on the timer to essentially talk through a couple of main areas. One, FutureSight's build thesis, our advantage to repeat entrepreneurs. I'll talk through a few portfolio stories, and then we'll wrap up with why we're doing this and why this is an exciting time for all of us to be here. So I'll start with our build thesis. And this shouldn't come as a surprise to you. The single largest market on earth is the labor market, and digital employees are taking a direct bite out of it, not by making human workers slightly more efficient, but by actually doing the work themselves. Um, we at FutureSight made an early bet, early mental shift where we decided that we're not betting on the next SaaS wave, but instead we're betting on the rise of the AI agent workforce. So our companies sell with that mindset. They don't charge per seat, they don't sell features, they charge for outcomes. Outcomes that are basically generated at a tenth of the cost of a regular human and delivered at 10x the speed. So, if we believe that AI agents are the new labor workforce, then the obvious next question is what actually makes an AI agent solution successful in the real world? From everything we've seen across different founders that we've worked with within our own studio, across different vertical markets, we see four major characteristics as to what makes something a winning AI solution. And I'll demonstrate this quickly with an example of one of the ideas that we have that we're working on right now. So let's take the employee benefits ecosystem, a $20 billion market. So every renewal season, an employer, the company has an HR team and the brokers, they're basically scrambling with fragmented pieces of data, trying to find information from different areas, spending hours organizing it, trying to extract useful information from PDFs, trying to make the right decisions for that next year's benefits cycle for the employees. So a good AI worker wouldn't just go in and say, I'm going to be an end-to-end benefit solution, but rather would start narrow and would first work to focus on extracting every piece of useful benefits data from the different messy carrier files. Then a good AI worker would be able to adapt to different formats of spreadsheets that each carrier brings. They all come in different shapes and sizes. A good AI worker would have been trained with context on the employer, on the company's plans, on the company's past claims, renewal dates, and contribution strategies. And lastly, a good AI worker isn't supposed to solve all your problems. No one's buying that solution. It's meant to partner and sit on top of your existing platform and have access to data. Much more on exactly how we go into baking these solutions, but I just wanted to give you a high level that these are the contours of what we look for when we're crafting a business. So let's go into FutureSight's unique advantage to repeat entrepreneurs and co-founders. So I'll start with this. Even the best entrepreneurs have maybe built a company two times or three times or five times in their lifetime. What I'd say is when you're partnering with us, you're choosing a co-founder that has gone through that entire build cycle about 70 to 100 times. We've seen every pattern, every pitfall, every shortcut, and our entire value proposition as a co-founder starts with one thing, that is putting you at the center of the build. So there's three main areas of venture success where we shine. First is crafting the right DNA of the business. Second is bringing together a fully stacked co-founding team that you don't have to hire during 0 to 1. And three, capital plus our extended advisory and investor network. So let's dive into getting the DNA of the business right. So in the last 24 months, we've scanned over 2 million opportunities, identified over 100 compelling problems, thesis filtered about 50 of them, and validated 6 rigorously. If you've been attending our monthly Behind the Build series, you've heard us talk about the next couple of opportunities we're excited to go build. So we're able to do all of this and manage this intense funnel with the help of our AI-driven signal detection engine that's basically scanning the global landscape of vertical B2B opportunities, thesis filtering it for FutureSight's AI agent thesis. And on a weekly basis, we handpick a select group of businesses to go rigorously test and validate and kill more as they get through the funnel. Our conviction grows, and our investment grows as we gain conviction through these stages. As a result, we've created a proprietary decision data set that expands our evaluation bandwidth and improves our overall level of conviction that the ones that we do end up picking are the absolute best ones that we want to be building. So Alan, one of our partners, is here with us, and we'll be happy to talk more if you had any questions around how we win with that methodology. For now, I'll carry on to talk a little bit about our scoring rubric. So at the outset, here are some of the criteria. First and foremost, vertical AI solution. We're looking at solutions where an MVP can be built for less than $50,000 in 30 to 60 days. No proprietary hardware. We're targeting the B2B mid-market. We're staying away from the large whale enterprise sales. We want to make sure there's at least 10,000 customer prospects in the initial wedge. We're aiming for businesses that can have a 2 to 4 month sales cycle where there's a single buyer, a decision maker process, roughly $10,000 to $50,000 in ACV, $100 million revenue potential in 5 years, and positive externalities. For simplicity, once we've kind of identified an opportunity or identified a founder to work with, here are the 4 phases of FutureSight's venture build process. We have teams of people and processes dedicated now to each of these. Some of you might have seen this slide before. It's our proprietary 51-step playbook built to launch and scale venture scale businesses. There's a lot on here, but basically this covers everything from planning your first set of interview scripts to selling LOIs based on the initial mock-ups of the product, building out the MVP, hiring your founding team, building out your financial model, stress testing it with prospective investors, and then spin out, where the company spins out independently. And our role shifts more to this active board member and even as an active SWAT team to come in when the business needs that hands-on support. So we'll talk about 2 portfolio ventures and founders we've co-founded with. I'll just give you quick stories before you hear from some other founders. So let's start with a company called Addy. The CEO, Andrew Howard, he's based in San Diego. Andrew had built 2 substantial businesses in edtech in the past before he came to FutureSight. One of them he grew to 15 million in ARR, and he exited that to his business partners. He knew when he came to us and we were speaking, he knew that he wanted to build something again in edtech, but hadn't quite figured out what shape it would take in this post-Gen AI world. So we started our ideation around that, and it was for that reason that Andrew and FutureSight picked each other as a mutual partner. During initial validation, we basically were figuring out what the business model looks like, who to sell to. If you've been in ed tech before, you know that there's not many paths in the market. You can go B2C, you can go B2B, you can go to public schools. We figured out with Andrew a wedge in the independent school market. Initially, it was just lining up conversations with prospects and seeing who was getting on the phone customer-wise and who was resonating with the pain point, and who was sort of kind of begging for a solution that would, put money back in their wallets, essentially. So as we figured out this wedge, essentially the problem in a nutshell is counselors. The work that counselors do in public schools, the ratio of students to counselors is 1 counselor for every 600 students. And in private schools, that maybe looks like 1 to 30. But still, students are grossly underserved with respect to with respect to advice. And it often comes in too late with respect to their future careers and, what to make sense of with their life. So with Addie, an AI student coach that starts at a very young age in school, gets to know you. It's a voice first agent that students speak with over the years. We quickly found this value prop. We found this go-to-market avenue. So with Andrew, after we decided to form the business, we helped hire 3 engineers, UX support, head of product, got a pipeline of about 50 customers live currently with 8 of the top independent schools in the United States, and raised a small pre-seed round and target to raise a seed in Q1. So we're very happy with the outcome of Addie and excited for the next few years. I'll talk about a second company called Mercata. So this one, the ideation was a little bit different, where the business problem came to us from one of FutureSight's investors, one of our limited partners, a hedge fund. Essentially, the problem that they came to us with was that their analysts are drowning in unstructured data and filings, your CDAR filings, PDFs, and your existing tools like Bloomberg and Edgar are good for keyword search, but not for reasoning, and they're not sort of giving intelligent insights. So, and then they had some experience with LLMs, but were noticing the hallucinations, right? So essentially, we wanted to go to market with a product that could help financial teams get a better ROI on the time that they're spending and not, waste hours manually extracting data. So we decided to build out Mercata, starting with an initial vertical wedge of hedge funds and analysts, and over time look to expand into, PE and corporate strategy and so on. Rich and Matthew joined us to build it out. Rich, as a CEO, had grown and scaled his past company from 0 to 25 million in ARR and was looking to sink his teeth into his next new business. And Matthew is a world-class CTO, AI focused, and Matthew had exited 2 prior fintech investment focused technology businesses. And as we introduced the both of them together to the problem of Mercata, to the pilot customer that we had landed, it's been perfect chemistry, and they're currently delivering their MVP to the delight of their initial customers and plan to launch their seed in the new year. So I hope that gives 2 examples of how we kind of work through the phases of initial ideation, validating, MVP build, team formation, financing, and then growth. All right, let's talk about the co-founding team that we bring. So we've built our team at FutureSight to be the dream team that every founder should have access to in order to be competitive in this new AI world. So there's disciplines from software development, HR recruiting, business design, fundraising, strategy, legal. You even have access to an executive coach that you work with one-on-one, marketing, product, finance and accounting, taking care of your bookkeeping, UX, grant funding, and go to market. So all the resources that you probably cannot afford to hire in the early days of building out your company, or are generally, carrying all of that weight on your own shoulders. There's multidisciplinary approach to the way we've built out our team. I'll also add that every person on the team is incented with founder level equity in the companies that we're launching, which aligns us really well as co-founders, different than if we were just coming in as an investor down the road. All right, let's talk about capital. So the formation investment that FutureSight makes is over 250,000 USD. We don't want to, at this stage, when our entire build team and process is essentially to determine and validate that there's a market for a product that people love, we don't want to be overcapitalizing and diluting the business at this stage. Of course, separate from cash, by the time you've spun out from FutureSight into your own independent entity, our team has collectively invested over 750,000 to $1 million in terms of build and resources. And typically, after spin out, companies are going into a seed round next. So here's a quick view of our investor network and growing. If you're an investor on here and want to learn about getting early access to any of the FutureSight opportunities like our own limited partners do, and select VCs and angels do, let us know. We're building out a syndicate, but happy to continue to grow those relationships for our founders. So I think I've got just two more slides here before going into the economics, but I wanted to take a minute to just share for a moment why we're doing this. I think as a repeat entrepreneur, as an entrepreneur, you have a lot of options. You have a vast network, you have a ton of scars from your prior businesses, and you have clarity that you want to hit a home run. And in our years of curating the model, our team, and our offering, we've basically arrived at this framework as our key reasons for existence. That is to help founders like you fulfill your life's work. So, first and foremost, we want you to be able to answer yourself with conviction that this business idea and solving this problem for this customer or playing in this market is worthy of the next decade of your life. We want to be building out. We want to be building transformational relationships with each other, with our customers, with our employees, and our investors. Then I'll say here for the last couple, we know that we're amidst one of the largest technological waves of our generation. So we want to catch the wave and maximize our odds in riding it to the top and help us really live out our deepest ambitions. So here's the deeper sort of philosophical why as to why we've gone about curating the process and the playbook and the team and the different stages in this fashion. With all that said, ultimately for the founders, that is you have to lock into this, what we're building, and say, yeah, this is what I'm meant to be doing for this chapter of my career. Lastly, the economics. So this is a view of the common equity. Depending on when you start with the business, there's a range of equity that the CEO and the CTO earn. This is typically between 30 to 40% for the CEO or 20 to 30% for the CTO. And that's typically because the CEO comes in first and has taken on more of the risk, but this can always have variations. And FutureSight sits at about 30% common equity, and the rest of the cap table is split amongst the co-founding team. So that's all from me, and I'm delighted to pass the floor to Justin Mason from Caring AI, who will talk about his journey as the CEO. And I remember talking to Justin first when he was first considering working with us.
That's right. Pratham was the first person I met. So thank you, FutureSight, for having me. And nice to meet everyone and look forward to talking further. And I'm Justin Mason, co-founder and CEO of Caring AI. We provide cognitive screening and care management support for dementia care management. We can go ahead to the next slide, actually. I'll be a bit conversational, but I'll start with sharing just a bit about me and my background. I've been in healthcare for about 20 years. Always on the side of care management outside of the clinic walls. For example, working with dialysis patients. So I work with nephrologists after they diagnose and caring for patients outside of that. So I've been in senior care. My background continues further. In my first company, as Pratham mentioned, most of the EIRs have a background in starting a previous company. My first company was called Mind Healthy. We provided virtual psychiatry and therapy for primary care, enabling them to provide that kind of care management. And my background also is largely in this value-based care, not to go into too many details, but where total cost of care really matters to health systems and large care organizations. And what drew me to FutureSight and a tiny bit further about my background. My mother was diagnosed with dementia, Alzheimer's, in 2015. And I really saw through the lens of the care that had been provided in my other organization, an opportunity where she got a diagnosis, but that care outside of the four walls was really missing. And that was the thesis that I brought when I came to FutureSight is, hey, I've got this broad thesis of there's care support that's needed here. I've seen this care management support, and this is where I really dived in with FutureSight, and we built out our product and business around that. I would like to back up a bit further and say that I did come through a lens of comparing FutureSight against another EIR, a venture studio. I had been with one of the largest in the U.S. health-focused venture studios, and it was a very different model in which you came in and there was a ton of support and resources, but you really were less of defining a real business. They had the pipeline, they had the business, it was pretty built out. And you kind of came in as the CEO to lead it, and you kind of directed the teams, large marketing team, et cetera. And that opportunity really wasn't for me because I really wanted to have more of a stamp in defining the actual product and the company itself. And I really did find that at FutureSight. And so what I would say about FutureSight and my personal journey is I came in with a thesis, and there were very clear, structured support and resources to really drive me through that ideation and validation process. And so I'm going to talk a bit about this further in my lessons learned, but that's what I would share on that piece. And so let me dive in a bit more about Caring AI. Caring AI is a phone-based cognitive screening tool. Prathna mentioned that voice agent workforce enablement. That is exactly what Caring AI does for healthcare. And so I'll speak a bit more about that if we could go ahead to the next slide. And so touch more on the problem that we are solving. I mentioned Alzheimer's and cognitive care. So there's 7 million Americans today that have dementia, and what most don't know is about 70% of those don't know that they have this diagnosis. And when you back up into that care chain and value chain that Pratha also mentioned, primary care does not have time to do the screenings that it takes to identify these patients. And that's the piece where we focused in on as a first wedge into the market to provide care. And there was a huge value there that we saw. So 8 out of 10 primary care physicians don't have time to do the screening that takes about 30 minutes on average to complete and some further evaluation. So our voice agent actually completes that for them. And we can go ahead to the next slide, and I'll talk a bit about exactly what our product is and what we do. So, and in summary, Caring AI Listen is a voice agent that over the phone does a structured assessment for cognitive evaluation. So patients able to answer a phone call, walk through a set of cognitive assessment questions, then some additional questions on mood and their functional capabilities. And within minutes, we're able to provide a report to physicians that don't diagnose, but give physicians a very clear direction in where a patient lies in terms of their cognitive ability and give them confidence to actually make a diagnosis. Why that matters in healthcare in the US, a diagnosis for an organization is worth about $5,000 in terms of payment from the government, because they say, hey, we want patients to be diagnosed early so they get better care. They're taken care of earlier because ultimately that leads to better long-term care and lower cost of care. That's the business model behind it. And so that's the very clear value from the actual process that we attach first. And so physicians are able to follow up. What we hear a lot in the market, and is also something that came through our validation process, is, okay, great, if we have a diagnosis, now I'm the physician and I'm liable for providing care. And I don't have specialized care management. So part of our solution, our second piece of our business line, is Caring AI Act, where we also provide a service piece of the business where we do follow-on specialized care. And there's really opportunities there as well to drive more efficiency. But our first wedge and our first focus is really on the screening piece of care. we can go ahead to the next slide. And if I just share a little bit further about, kind of the journey that I've went through it. Today we are spun out. We've spun out from the studio early this year. We are at a pre-seed stage and have been over 50% committed to our first round. We have partnerships with Northwestern University and Penn State for clinical validation and have an SBIR, a grant application in process with the National Institute of Health. We've built out our CTO team and our early team, and we have some really good traction with initial pilots and some very far along conversations with large health systems and enterprise customers. And so that's going well. And if I take a step back and share what really has been key to me in terms of FutureSight, I'll just start with the point one here. And again, I look forward to really getting this stop as we ask questions and dive into these further. But as I mentioned, the difference between FutureSight and other venture studios, in my opinion, is, it is a really pull. And I think this is part of evaluation as well as like your ability as a potential CEO or business owner. It's not a push. You're not going to get pushed to do the work. You're going to get a process and some very efficient support and care and guidance, but you really have to do work. So, for example, making your outreach to your network and really understanding the market and the need, that's really on you. And so you got to be ready to work. And so you're driving your own engine as you start. I mean, the second point, and this kind of builds into that, is for me, if I tell a story, take the validation piece seriously. So as you're doing hundreds of customer interviews and talking to the market, what you learn really does become the backbone of your product. And so I kind of testify that. And I had a great experience with Alan and Iman, who were on the call and really helped me drive that process. But I think the step back point here for me is don't be married. I came in with a thesis, but there's an art to, listening to what you learn and really refining your product, because that's going to amplify into what becomes your company, where real product market fit matters and being able to close deals. Right. And so that was a key learning for me and a big validation point and strategic point for FutureSight. This third point is relationships. And I say that for a couple reasons. Those that I see do well at FutureSight, in my opinion, FutureSight has a lot of very smart people, but they're also low ego. And I think that's a culture that works very well at FutureSight and really helps you build strong relationships. And so I love that high IQ and high EQ. Feels like it was a culture that really thrives at FutureSight. And that's going to naturally, as FutureSight is built into the process, lead you into building some really good relationships. Some of the EIRs that were previously mentioned were very good supports for me as I went through our process. The advisor that I had a chance to really kind of date through my validation process has become my board of director on my company. Strong marketing support and investor introductions, which now have become part of our first raise, have come through FutureSight. And so I think the relationships really do go further than just what the initial process would suggest. And some of these data points I went over earlier. Our CTO gained through the studio, through those relationships, investors and board of director all evolved through the process that aren't a natural piece of just this is part of the formula. And so I like to highlight those. And then my last point is what things look like today for me. So post spin out, we are really full ownership, and that part is fun, but also tough for me. Like I love having the interaction with the team, but really I have to focus on building that through my own team and network. And so that's where we are today. So a lot of my time is spent on go-to-market and outreach sales, building out our operations and fundraising as well. Building our product past, making it even further commercial ready. As FutureSight doesn't, leave, we still have very close partnerships as well. For example, I think there's kind of opportunity for specialized support. So marketing is something I wanted to carry forward, and I've had the opportunity to do that, even post spin out. advice and relationships throughout the company and the team. And so that goes across fundraising, product, all of those questions. You still are able to tap into the network post spin out. Again, in my opinion, the network really is the strongest asset. I came into this previously founding a company on my own, and my thesis was I wanted to de-risk it, not do it again. And so um, that that has proved out very well so far. And I'll stop there and I'll pass it off to Stephan to take it from here.
Hi, good morning, everybody. So I'm Stephan Thomas. I'm a current entrepreneur in residence with FutureSight. Just a little bit about me. I have a kind of a dual career, half of which is in consulting and half of which is in entrepreneurship. Between consulting firms, I actually started various business with different degrees of success. But the last one I sold about a few years ago, and then since then I've been doing advisory and mentorship and coaching in the startup ecosystems here in the Bay Area. I'm based in San Francisco, just north of the Golden Gate Bridge. And I came across the studio about 2 years ago, a first time, and it was really I got very interested into the notion of ideation. So all this process by which we formulate the ideas of various business. So I started to work with the studio, and then we kind of landed on an idea that did not really fit the studio investment thesis. So we parted ways, and I went and did some other things. But it was a very good experience, and I came back to the studio because at this time at a different level, where the studio has already incubated an idea. So right now I am in what Pratna described I am in the validation stage of that idea, and I'll talk to it on the next slide, which is an AI solution for automating and optimizing the due diligence process, starting with the buy side of private equity. So, like being fairly narrow focused, that's our wedge. We're going to focus there. There's a lot of activities that are non-valued activities, which is about understanding the documentations that you have, checking against checklist, indexing, categorizing, organizing, all of that, which is not really value add, and where AI can play a big role in helping those professionals to focus on value added analysis as opposed to organization of documents and data. The idea is to start with the buy side of private equity, mid market, and stay focused there for a demonstration of product market fit, and then potentially expand to other verticals such as real estate or stress debts and other segments of professional services. Ultimately, I think one of the vision would be to where can we apply AI so that we can keep professional service focused on value added activities as opposed to just organizations of documentations. So that's where I am. I'm doing customer interviews. This is my entire focus. I need to validate that one, the pain is real, and I'm on my way to do that. I need to validate that the way we are thinking about the solution is the right one. I need to validate that there are people willing to pay, to address that pain, and I need to validate that there are enough people that we can scale a business. On the next slide, I'll talk about the reason why I like working with FutureSight. Building a business is hard for those of you that have done it. Building it alone is extremely difficult. So sharing the burden and the risk is part of a big value proposition of the studio. They bring a playbook. I mean, I've built company already, a few of them, but it is a very more rigorous playbook with very defined steps and gates. And that's very helpful because it brings to a solo entrepreneur, it brings kind of the structure that you need to move ahead. It's an honest gatekeeper. It's we you know it's we're trying always to make sure that our assumptions are validated. They're not just a bright idea with a good intuitions. Those are necessary, but they need to be validated. And the studio play that role of keeping me honest with my idea, with the size of this idea, with the size of the pain. As entrepreneur, you're overly optimistic, so a little bit of reality helps with the development of the business. It's a sparring partner, so I'm not alone here in my beautiful office in San Francisco. I have someone that I can exchange idea, doubts, and I'm doing that on a daily basis with the studio. And finally, the studio is vested in my success. They're investing time and resource in helping me being successful, so we are completely aligned. So it's for me, at least, it's a good way to do my next venture. So I think that's it for me, and I believe we're gonna open it for Q&A now. Correct, Krista?
That's correct. Yes.
Okay. Thank you.
Amazing. Well, thank you, Stephan, and thank you, Justin, for sharing your stories. That's really fantastic. The questions are coming in, and I also like to thank Pratna. I always love listening to you present. Thank you so much. This is a QR code to a feedback form. We would love your feedback. There's also opportunity on that feedback form to ask additional questions. So please, please, please give us feedback about the event. The code will stay up as we advance the slides through the Q&A. So if we could go to the first question, which is for Anu, and these we asked in the sign up form for the event if you had any questions. So we took those and consolidated them into some questions, but we'll also be looking at the chat. So keep the questions coming in. So Anu, what traits and experiences does FutureSight look for in an entrepreneur in residence? Over to you, Anu.
Yeah, thanks, Krista. I'd say as I talk to entrepreneurs, this is one of the most frequently asked questions. So I'm really glad that this came up and we're able to address it today. If I had to really sum it up, I'd say FutureSight looks for builders who've lived the entrepreneurial grind in the past. I mean, look at Stephan and Justin, right? And they feel excited to do it again. This time, even bigger with with us as their co-founding partners. If I were to really zoom in on some key attributes, I'd start by saying, what's repeat entrepreneurial experience really? Why is it important for us? I'd say we partner with founders who've lived the early stage journey. They understand the rigor and resilience it takes. Yes, an entrepreneurial story with a financially great exit is like it's a strong signal. It shows that you've driven successful financial outcomes, and that's commendable. But what's also important, I would say, is if you build something meaningful, wrestled with ambiguity, iterated the product, and earned real scar tissue, like Pratna mentioned, along the way, like this experience is extremely valuable because it shows us that you understand what it truly takes to build from scratch. The next one I'd like to highlight is deep industry expertise. I think that Justin very briefly touched upon, how he had built in the similar space in the past and how he closely related to the problem area that he was wanting to address. So we look for founders who bring deep domain or industry expertise, especially when we are looking at building specifically studio validated opportunity. This experience of having operated or built in that space gives you the clarity of the real pain points that the customers are facing, understanding the customer mindset, the dynamics that are active in the market that we are trying to build in. These are key drivers. Having a network of operators, champions, early buyers, and the context and access that come with it can dramatically accelerate discovery, validation, and early traction. Another key element I would say is leadership and team building ability. We seek founders who can really shape culture, who can attract the right talent at the right time, even at the early stages. Basically, the ability to lead people through the early stage uncertainty and take them on this path to building something impactful. This leadership muscle is essential when you're sort of building from just a concept or an idea, really, and looking at creating big impact in the market. We also look at strong product judgment and an iterative mindset that comes with it. So the ability to understand customers, identify real problems that are worth solving, and translate these insights into really smart product decisions that come at the right time. This is a powerful trait. The last one, but an equally important one that I'd want to touch upon is entrepreneurial mindset. So we look for founders who are curious, resilient, hungry, and above all of this, I'd say who are open to co-creating with us. So we work very closely with our EIRs as their early team. And so it's incredibly important that there's willingness to collaborate. There's openness to having their ideas challenged. And then through all of this, stay steady and um, be open to this partnership and navigate these ups and downs with us shoulder to shoulder. So overall, I would say we look for founders with meaningful 0 to 1 experience, deep industry context, and strong leadership capability. I'm happy to take if there are any follow-on questions from this.
Great. Thank you, Anu. Yes, and keep your questions coming in. And I see John, our founder and managing director, is answering questions too. And so is Alan. So keep them coming in. We're clearly going to run out of time, but let's go to the next question, which is for Alan. So Alan, if you could talk about which vertical opportunities we're looking to build in over the next 12 months. And Cindy, there's another slide for this as well. And reminder to keep the feedback coming in too with the QR code. Over to you, Alan.
Yeah, we've got a load. I'm going to actually just open up our, we've got a whole folder full of opportunities that we're aiming at. So I'll give you a few ideas. I'm just going to rattle these off. I'll take 60 seconds. So we're building in IP and IP protection for law firms. We're building for small law firms, front office type products. We're building in a horizontal, which is voice tech. So, when you call and you're not talking to a person anymore, you're talking to an AI, and it's a part of a front office. We're building a bunch of different front offices, which include receptionists at the moment for various verticals. Some of the big ones are, dental and healthcare, home services. That would be like HVAC, roofers, electricians, plumbers, etc., stuff like that. You saw Stephan talking about PE. This is a new space, that we're entering. We're doing a semi-horizontal product around an accounts receivable product. We're looking at freight as an interesting space. We're interested in customer success. We're interested in the manufacturing space. There's a bunch of things that could be done there. A lot of fintech stuff, generally around like the document collection and verification processes. There's a lot there that we're looking at. Those spaces are so rich in terms of the volume of documents that are needed to, address if someone could get a loan or not. RFPs, are something that we're looking at. Tax is something we're looking at. They're really all over the map. We don't have one vertical that we're constrained to so much as we have a black list of things that we don't do. And I won't even bother mentioning those now because it's somewhat various. So I'll maybe leave that question there.
Great. Thank you, Alan. We're going to go to the chat and I'm just going to pull out a couple of questions.
Yeah. Hey, there you go. This is kind of the list that I was reading from. So this answers that question.
Yes, it's an amazing list. Okay, so we value everybody's presence here today, but I do have to call out that we have an entire grade 9 entrepreneurship class on the call. So I think that's really fantastic. So Pratna, this question is for you. Actually, I'm going to combine a couple. So from the grade 9 class, do founders try to negotiate the equity piece with FutureSight? And then also from Aaron, is 30% equity the norm out in the market? So if you could address those two.
Yeah, well, firstly, welcome. Thank you for being here. So do founders try to negotiate the equity? Um, I think like when you're going into a relationship with a co-founder, you do go in with the mindset that everything is negotiable. So I feel like yes, every founder wants to do that, and that's maybe their position initially. As we spend time through the process, talking through here's the engine and all the work that was done in bringing the idea here. Here's all the resources that are going to be put up dedicated to this project. Um, it becomes pretty easy to align on the terms. And I think the second part of the question is quite related to this, which is the industry norm for venture studios. I'd say we are definitely, in the average range. There are studios that will earn, let's say 90% of the business, and bring in CEOs and a C-suite to run the company. And I think what we realized is our approach was going to be a co-creation approach where we wanted to bring in the founder and the co-founding team early enough that it feels like we are actually birthing this together. And so in a perfect world, we do look like equal co-founders with, let's say, a FutureSight and a CEO and a CTO, for all taking in, different levels of risk, but coming in early enough to create the business. When you see organizations take, 5% or 7% of the business, that starts to look more like an accelerator. And those are time boxed programs with workshops and programming, and it starts to not look like a co-founder partnership or relationship. So that's how we're different.
Great, thank you. And we lost the sharing of the deck, Team
Yes.
FutureSight. So if we could bring that back, I wanted to ask a question here for Justin and Stephan. So the question is, what should a new entrepreneur in residence know to get the most out of the FutureSight model? So how do you get the most out of the FutureSight model? It's for Stephan and Justin.
I can start really quickly. Again, I think there's that, again, it's a pull, but there's a very formulaic approach, as Stephan reiterated too. You really have to lean in, drive forward yourself, and use the opportunities that you have. Some CEOs have a very, more narrow mindset and somewhat a solo mindset. I'm kind of the opposite. I like to take advantage of all the people around me. And if you do, you really can kind of double, triple the value of what you get from FutureSight, in my opinion, by just leveraging those relationships and the connections that are there. So that would be my quick answer.
Yeah, and then just to piggyback on that, as I said, the studio brings all sorts of resource and playbook, and but at the end of the day, you do have to do the work. You're still an entrepreneur at heart, and this is up to you to put the efforts that you need to. It's almost like, the studio is a car, and then you're the driver. If you don't want to drive the car, then you're not going to go anywhere. So it still relies on you to build a company, and you just have like a partner that will support and accelerate your efforts.
Awesome. Thank you so much. This question is for Alan and Prathna. If you could go to the question about killing ideas. So Alan, the question is, and people had this question when they signed up. So walk through an example of an idea that looked promising at first, but FutureSight decided to kill it. So what signals led to that decision?
Yeah, I'll talk about one that I was originally really excited about. I thought I was like, "Oh, this is a no-brainer. Like we're just gonna nail it." And usually, if you feel that way up front, it's probably not going to work out. That's been my experience so far after being through many of these cycles. It was in tax, and we were, tax is such a great place for AI because there's so many documents and it's all really boring, and it's just there's a right answer, right? You essentially follow this rule set, come up with this outcome, you're done. Which is very different than perhaps a sales call where there's a lot more nuance and there's different ways of handling that. So first, great vertical to be applying the technology into. We looked at basically state tax remittance. And usually what we'll do is when we go into the space, we figure out, well, who are the big competitors there? And when we start talking to customers, are they using those competitors or are they not? If they're not, great. It means that the market penetration isn't that strong, meaning that there's space for us to go into the market with something. In this case, when we started talking to customers, they said, no, actually, I'm using all these tools already. This problem is pretty solved. So our initial analysis research that told us that this was a great market turned out to be wrong when we talked to customers. So normally you would kill it. But in the same meeting, I was hearing from them that, well, they handle up until this point in the workflow. There's this whole secondary workflow that nobody's helping us with. Great. So we dig into that workflow. We had a couple of early signals that people were willing to pay for it. We could technologically achieve the outcome that they wanted to. There were plenty of market conditions in place that would never change and make it really challenging. Like all of this stuff runs on American different state tax portals, and they have no incentive to change in any short period of time. So the market conditions would be stable for that. And then as we got further along, the problem wasn't big enough. So as much as it was we could have killed it first because the competitors were too strong. We found an angle. It was a real problem. It wasn't a problem that they were willing to spend enough to solve. And ultimately, it's probably a feature inside of another product. So there's almost like 3 reasons why that could have been killed at any point in time. And that's why 2 out of 3 of the ideas that we invest significant time on never see the light of day.
Great. Thank you, Alan. Time is almost up. We're going to take one more question, and it's for Stephan and Justin. Can you share your experience with pivoting or parting ways when things weren't working? So it's the last question in the deck, Prathna. So the question again is, can you share your experience with pivoting or parting ways when things weren't working?
So I can talk to the parting ways because we did that. So we spent a lot of time on a lot of different ideas, and then we kind of went down the path of cybersecurity idea. As we were digging into that, there was a couple of things that happened. One is the realizations that the technical build will be very, very complex. And then 2, that it didn't really fit the investment thesis of the studio. So we decided to drop that idea. And this is when I went off and did some other things before coming back, as I said. So it was a natural flow, if you will, that where we ended up saying, no, it's not going to work within the context of the studio.
Great. Thank you. Justin, did you have anything to add quickly?
I can share a very quick story of a somewhat late pivot. We went through all of our early validation questions and started at the market targeting care management and really optimizing the care platform for care management. And as we went to pilot physicians, they said, wait a minute, this is great. We're signing up, but I don't have a good way to identify patients. And we backed up and really focused on the screening part and uncovered a massive opportunity there. And so I'd say that was a pivot that we had to make pretty late stage. Absolutely.
Great. Thank you. Thanks for sharing that. Our time is up here. If we could just go to the final slide. Again, feedback, super important. Thank you so much for taking time out of your day to share it with us. We really appreciate it. We'll send out the recording. And yes, thank you, Prathna. Thank you, Anu. Thank you, Alan. Thank you, Justin. Thank you, Stephan. Amazing. Thank you. Thank you. And please reach out with any other questions. You know where to find us.